Hi traders, welcome back to the weekly forecast video for the new week starting on 25th March. This week, Fed surprisingly hinted at 3 rate cuts in 2024, which sent dollar crashing, but it fought back fiercely, ending the week with a strong rebound. So join us to explore its implications and uncover the potential trading opportunities in the coming week. So as usual, let's start the weekly analysis from dollar index. So here we go on the dollar index chart, and right now, just to keep it short, I'm going to apply fib retracement between this low and the recent high. Now based on the retracement, we got, give me a second. Yeah, I've marked the retracement starting from the swing low to the swing high. We got the bearish correction towards 61, made a higher high formation, got the retracement, and now again it's marching upwards. So I believe that we can also apply a rising channel here. Now I'll just turn it into a line chart, and I'm going to mark a rising channel. So based on this rising channel, currently it reached to the lower boundary in two waves format, made a higher high, again retested the lower boundary and started marching up. Now I can also apply fib retracement on the downside. So this time I'll be using retracement from high to low. Now we can expect corrective move towards 50 or maybe 61, and then continuation to the downside. So fundamentally, Fed has announced they are looking to make 3 rate cuts in 2024. So rate cuts are not in favor of dollar. So followed by rate cuts, we can expect that dollar should get weakened. So here, if rate cuts are announced starting from summer of 2024, so somewhere around June, we can expect dollar to crash. But before crashing, it has to complete ABC pattern. So here I'll be applying fib extension. First high, higher low, and based on fib extension, the first target is 105, and if it continues further, then we can expect dollar to reach somewhere around 107.89 to 108.79. So this is the area we can target in the shorter run before it starts melting down. Now I'm expecting, and then continuation to the downside. So this is the plan for dollar index in the near term. Now if dollar index is rising, definitely most of the instruments against dollar, they would be short-term bearish. So let's look what's happening with Bitcoin. Now we are on the weekly chart for Bitcoin, and I'm going to apply fib extension in the bullish direction starting from the lowest to the first high. That's around 13,000 way back, the level of 13,000, and marking to the higher low. Now based on this first bullish cycle, the 500% extension level was completed at 57,479, or we can just round it off to 57,500. Now I'm going to mark the bigger bullish cycle from the lowest to the previous swing high of 2021 and higher low. Now we are again having a confluence of 61.8 extension level. That's very close to the previous 500% extension level. So this is a very strong level of support. And the next upcoming target is Fib extension 100%, and that would be around 81,000. So we can expect in the near term, so first wave up completed, third wave, second and now third completed, we can expect fourth wave, that is corrective, and then finally continuation to the upside. So we have higher high pattern on MACD histogram, we have higher high pattern on MACD lines, which means the bullish trend is not yet over. So a short-term consolidation or correction is possible, but there is no sign against the buyers on the weekly chart. Now moving down to daily. Now turning it to a line chart, if you notice, we have a continuation of high, higher high, next high, higher high, and higher high. And we also have continuation of high with a short-term divergence here. Then we got a new high, higher high, and higher high. So there is no bearish divergence, which means nothing against the bullish plan. So we can expect again short-term consolidation and then continuation to the upside. Moving down to 4-hourly chart. Now here, based on the 4-hourly chart, I can see bearish divergence on the top, higher high formation, lower high formation on MACD lines, even on MACD histogram, and this low is not yet broken. So the sellers are not strong enough to break the BOS. We can expect bounce, and then if it creates a lower high somewhere at 61.8 of this downward pattern, then from there we can expect the third leg downside. So we have A, B, and C, which may be completed somewhere around 55,000 mark. So let's try to analyze, let's try to find out the level of 61 here. So this is the support which is required to be broken, the BOS level. I'm expecting a short-term rebound towards 61. That could be around 68,000 or 69,000 mark, and then continuation to the downside to complete A, B, and C corrective pattern, and then continuation to the upside in the longer run. Now, assuming that this short-term corrective pattern moves up towards 61, and yes, then I am just plotting on the assumption that we have a lower high formation at 61.8. Then the first downside target is 60,918. That is Fib extension to the downside. If you want, I can change the color to differentiate, so it's red. Yeah. So now this is the first downside target, that's around 61,000 in the round number, could be 6918, and which is again coming on the same level. So this becomes your magnetic level, a confluence level, where we can see end of short-term selling pressure and long-term bullish rebound. So this is the plan for Bitcoin. In the short run, I'm expecting correction to the downside, at least towards 55 to 56,000 mark. In the longer run, I'm expecting 81,000 to be achieved. Now let's look at euro dollar. Now, as we got to know that dollar index is getting bullish in the short term, so definitely euro remains under pressure. So this is the daily time frame chart for euro dollar, and our bullish cycle started with bullish divergence, low formed with bullish divergence, and this is the high formed with bearish divergence. So our bullish cycle started from this point and ended here. So I'm going to use these two levels to apply Fib retracement here. Moving back to the candles, and using fib retracement from the swing low to swing high. Now, after completing bullish structure with bearish divergence, it has also formed the BOS in the downward direction. Now we got higher highs with the breakup structure. Now after breakup structure, we expect market to go back towards 61 or maybe 70% area and then continuation to the downside. So let's see the retracement starting from this high. So I'm talking about this high to this low. Now I'm going to use fib retracement from high to low, and yes, the market went back precisely to 80% area. So this is our corrective A. Corrective A is completed, B is completed. Now we are in the third leg of this bearish correction. So we can easily apply fib extension in the bearish direction to know the downside target for euro dollar. So starting from the high, connecting first low, and now the lower high. So the first downside target is 61.8 followed by 100%, which could be the confluence of the fib retracement of this bullish cycle. And yes, we have 61.8 coming at 38%, and 100% is around 61, not exactly on 61 but somewhere near to 61. So we can expect euro to remain under pressure in the short run, and once this ABC corrective pattern is completed with bullish divergence, we can expect that the bearish corrective pattern would be completed, and we can expect rebound to the upside when dollar starts melting again, maybe somewhere in the mid of 2024. So short-term plan, sell the rallies for euro dollar. The next instrument is pound versus Canadian. Now trying to clean the chart. So here we are on the weekly time frame right now, and turning to a line chart. So we got downward pattern with bullish divergence. So the bullish rally starts from this level and it has come to an end, or it's almost exhausted. Reason being, we have strong resistance in this area. I'm just marking support and resistance. So currently we got blocked, the buyers got blocked at this resistance point, which is precisely at 1.7337, and I can see higher formation and then equal high formation with bearish divergence. So bearish divergence is not yet complete on MACD lines, but it looks on MACD histogram. So histogram divergence has come into play, but MACD line divergence is still awaited. Now turning to daily chart. Now based on daily chart, we got low, higher low, higher low, and we got high and higher highs. Now if you notice, between the last two highs I'm talking at, we have bearish divergence completed. Now the BOS is quite deep, so we cannot wait until the BOS level. Now the chart has got bearish pressure at the top towards this from this resistance point towards the next support. So here we go and mark the support. Now I'm moving to 4-hourly chart. Now based on 4-hourly chart, we got higher highs with equal highs on MACD lines. So bearish divergence comes into play we got the breakup structure, so we got lower low formation, and it looks that right now we are in the continuation of the downward trend, because I see lower low formation on MACD lines and lower low formation on MACD histogram as well. So there is no bullish divergence, and if you mark Fib extension on the first leg down and the first lower high being formed, the sellers have taken the price to 1.27, and we can expect a rebound short-term correction towards this area at 1.618. So the plan is to sell the rallies, a lot of selling pressure, short-term pullback, taking back to the retest of 61.8, and then continuation towards at least Fib extension 200%, which is around 1.6989, so which also comes very close to the psychological round number of 1.7. Currently we are at 1.7145. I'll be expecting continuation of the bearish trend from 1.7198, so we can take a sell trade somewhere closer to 1.72, and we can target 1.700. So it has a probability of 200 pips to the downside. You can also mark a falling channel here or a falling trend line, which may add to the confidence in the downward direction. So this is the falling channel. We can expect the retest of the channel top, which is again the Fib level, and continuation to the downside. So pound Canadian remains bearish in the short term. No signs against the sell plan, no bullish divergence, only this short term bullish divergence, which may help to complete this upward correction and then continuation to the downside. So pound CAD plan remains to sell on the rallies, bearish. The next instrument is crude oil. Now, based on this bullish cycle, I'm talking from this swing low, which was formed during COVID, March 2020, and post-COVID, this is the swing high. I'm going to apply Fib retracement from the low to the highest point. Now we got the correction exactly towards 50% mark. So the downward pressure ended at Fib retracement 50% level, and in terms of level it was around $65. Now after this, if we go back to a line chart, you will notice that we got lower low formation with bullish divergence on MACD lines and histogram both. And then the buyers, they have broken the BOS, they created a new high, and the correction was completed, and now they are marching up again. I do not see any weakness based on MACD. Histogram is strong in the bullish direction. MACD lines, they are also moving up with full strength. So no signs of weakness based on the weekly chart. Going to now daily. Now based on daily, we have low, higher low, higher low, higher low, and higher low. At the same time, we have high, higher high, higher high, higher high, and higher high. So the sequential pattern of higher lows and higher high suggests that it is still in the bullish trend, and I do not see bearish divergence being completed, although there are some signs of slowdown based on histogram, but no sign against on MACD lines. Now I can also use a rising channel here. So currently we are at the top boundary of the rising channel, and based on 4-hourly chart, I do not see any signs against. So again, on the 4-hourly chart, I can see low, higher low, higher low. Based on highs, we have high, higher high, higher high, and higher high. So we just got continuing bearish divergence here, which brings some bearish pressure, but not a major concern. It is not a regular type of divergence, which means we can expect short-term pullback and then continuation to the upside. Now I'm going to derive the upside target based on Fib extension to be plotted on the rising trend. So here we have the lowest candle. I'm going to use Fib extension starting from this low point, which was after the completion of retracement of 50%, moving up here. So the first extension target to the upside is 61.8 and the price level is 87.05. Now this is the upside target, and I'm going to use another bullish cycle to plot the second Fib extension starting from the recent low to the first high being formed and first higher low being formed. I need to use a different color here to check the confluence of two different bullish cycles. So the 200% and 61.8 of the two bullish cycles is coming closer to 86 and 87. So my ultimate target for crude oil is the price level between 86 to 87. At the same time, if you notice, we have two confluencing Fib levels at $80 mark. So this becomes a very, very strong region of support. And here is the next target level. Now we can come down to the lower time frame and we can look for buying around 80. So until price remains above $80 mark, we can expect to join the buyers and take our first profit at 83. That's the Fib extension of 161, followed by 86. Based on 1 hourly chart, I do not see any signs against the buyers, and it's under short-term pullback. We got high, lower high, lower high, lower high with bullish divergence. So once we see higher highs being formed, this BS being broken, I'll be confident in holding my buy trades, and the target is, the first target is 83 followed by 86. And finally, gold. So based on the weekly chart, here I have applied, I'll do one thing. I'll just clean up my chart and I'll restart from the scratch. So here, based on the weekly chart, now I'm not going back to the multi-year bullish cycle. I'm just going to the recent 2023 low. So I'll apply Fib extension starting from this low to the first high and first higher low. Starting extension from the 2023 low to the first high, cycle high and higher low. So 2100 was the first extension level, that is 0.618, followed by 2280, which is at Fib extension 100% level, which is not yet done. I do not see any signs against on the weekly chart. We have higher highs formed by MACD lines and higher highs, not higher highs, they are equal highs, but I do not see any sign of slowdown on MACD histogram on the weekly chart for gold. So long-term pattern still remains bullish, and we can apply, I can use this area as a strong support level. So 2100 psychological number, round number, and also the strong level of 61.8 Fib extension. Now moving down to daily. Now based on daily, I'm going to use this low at 1810, and I'm going to use the first high to add the next Fib extension cycle. So starting from 1810 low, connecting to the first high and higher low. Now based on this application of the next Fib extension, I just need to change the color, maybe, yeah. So now we are at 1.272 FIB extension, which was around 2187. It spiked up, but it spiked above this level but did not maintain the highs, and now I can see some small time weakness coming into play, and that's obvious because dollar is getting stronger, so we can expect some short-term pullback. So the first pullback could be expected towards 2133, again a fib level, followed by 2100, and if it gets further deeper, then the next level would be 2057. But I'm not expecting 2057 to be broken. In fact, I'll be adding buys around 2133 followed by 2100, and if it gets into a deeper corrective mode, then 2057 or 2060 to be taken as the level to add new buys, and the ultimate target would be 2280. Now let's go down to the lower time frame, 4-hourly chart. Now on the 4-hourly chart, I could see higher highs with bearish divergence, also on MACD histogram, but it has not yet broken this level. So no BOS, we can expect some short-term bounce, again being rejected around 2187. So short-term sells can be taken around 2187, but cautiously because higher time frame is still bullish. So if you are trading in the bearish direction, that could be an aggressive move, and you can take profit around 2133, 2130, finally at 2100. But if you are getting engaged in the short trade, please cash out ASAP. Do not try to hold your short trades because that would be against the higher time frame. Fundamentally, in the longer run, maybe after May or June, I do not see dollar getting stronger. So definitely gold should continue its bull run in 2024. So traders, this is the plan for upcoming week. I hope I've added some value to your trading plan for the upcoming week. And if you still have any doubts, if you want me to cover any other instruments, please feel free to contact me. Have a profitable trading week ahead. Bye-bye.